morning and welcome to the VSA Morning Miner. I'm Ollie O'Donnell. I'm joined by Paul Rankin. It's Wednesday, the 23rd of April. Very confused days of the week. Paul, how are you?
Pretty well, thank you. Pretty well.
Good. Right, we've got quite a few quarterly updates from various precious metals producers. We'll start with VSA client Sierra Madre, though. They've just had their Q4s and full years out, which cover the first 6 months of their ramp up at the La Guitarra mine in Mexico.
Yes, that's right. Q4 silver revenues were $1.9 million dollars at 31.58 per silver ounce, and the gold revenues were 2.4 million for $2,667 per gold ounce. Their gross profit for the full year came in at 1.36 million, and they have cash at 3.5 million as of the end of the calendar year, December 31. One of the key points here around the restart of the La Guitarra mine is it is back above its nominal capacity of 500 tons per day. It is now producing at commercial scale since January the 1st, and that the most of the ore that was produced during the first quarter or a good portion of it, was not in the resource and reserve profile for the mine at the time. It was essentially, or at the time prior to restart, so it was part of a development material, redevelopment underground material here. 30,000 tons were delivered to the mill during the Q3 and 38,000 tons in Q4. So 86% operating mill circuit capacity on the mill as well. And the deliveries of first concentrates had begun as of July 26th of last year, but as we said, not to commercial rates until the 1st of January this year. And they did get permission over the year to dry stack the current production tailings over the old wet tailings impoundment, as well as do paste backfill underground. So all the signs are that this is stabilizing very nicely as a restart to the mine for Sierra Madre.
Gold and silver revenues roughly equal gold, slightly ahead of silver in the 6 months. Obviously, now that the gold price has run ahead, it is more of a gold mine for the moment, but that could change quite quickly if silver prices catch up and the ratio normalizes a bit. That 3.5 million cash did include a proportion of unsold inventory, which we know was sold in January. So it's just the balance sheet snapshot that shows about 500,000 cash, but that 3.5 million is quite a fluid figure. But that's obviously what the market has been and watching closely is the working capital management, and really impressive that the company's got through the first 6 months really with just that loan from First Majestic, their major shareholder, of $5 million capex needed to get the project to where it is now, just $1.8 million, and the rest working capital. So really impressive to have got to that 500 ton per day operating capacity on such limited resources, and to be producing a gross profit, which we would expect turn into a net profit this year. We'll be updating our forecasts in due course, and I think the market has been waiting to see that the ramp up's been successful, as we come on to Hochschild and as Fresnillo shortly, both of those obviously much larger stocks are now around their 2020 highs. Sierra Madre has been holding in its recent trading range, but I think this catalyst and the next one, which is Q1 figures next month, will help the stock to re-rate, as people will understand that the company has successfully navigated this ramp-up period.
Yes, I think so.
And there we go. Moving on to Fresnillo and Hochschild.
Yes, first off, Fresnillo Q1 results. I think the key attributable points on this one is the quarter-on-quarter results, probably a little bit are somewhat disappointing for investors in that the both the silver and the gold output was substantially down from the fourth quarter of 24, down 9.7% on silver in the quarter, 12.4 million ounces. And gold production was down 23.5%, 156,000 ounces less than the Q4. The gold output, though, was higher year on year by over 10%. So it may, in some way, reflect just the way the mining sequencing at their various mines has been playing out that has resulted in much of that change. But not helpful, of course, in the fact that the gold price has been running so well just in the last 5 months or so. So they're have not been as easily capable of taking advantage of that at Fresnillo. They have not otherwise changed much of their guidance here at this point. And silver for the full year, expected production of at least 91,000 ounces, with 26 and 27 production guidance remaining unchanged. For Hochschild, we had numbers back on Q1 production of 58,000 ounces of gold and 1.8 million ounces of silver. They also have maintained their 2025 guidance to produce at least 350,000 gold equivalent ounces, with all-in sustaining costs somewhere around $1,600 per gold equivalent ounce. The lost time injury frequency rate has come down, so it's a safer operation than it was from this time last year. And also their ESG credentials are showing falls in their per ton water consumption as well. Total cash position came in at $83 million, which is somewhat less than it was at the end of the last quarter. And their net debt is actually higher still at $248 million. So it's a mixed bag of results for Hochschild, and we'll see if they can improve some of these other parts, particularly with the improvement in base metal prices or of precious metals prices going forward, whether they can make some substantial progress on that net debt, I would say.
Yes, both sort of highlighting that the key in these strong price environments is to maximize output and make sure you benefit from the higher prices. Paul, we've done nearly 9 minutes, so we'll call it a day there. Thanks very much.
Very good. See you tomorrow.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.